Good morning, everyone. I have to record this the second time because the file I recorded before for somehow it's got corrupted or something like that. So it didn't save and it didn't upload properly, and I just couldn't give you that link to that one because you'll get a blank screen. So, guys, the purpose of this video is the mock assessment 2 of your bookkeeping controls, the module. And guys, you've already done. The mock assessment one probably a while ago. This might you might have already done a while ago as well, but since your exams this week, so I think it might be a good refresher of how you're going to be approaching this kind of mock assessment first. Okay, so here I'm going to be recording all of this, and plus I will be giving you some tips on in case you have come up some sort of a a nemesis type question, how you're going to be facing up to those. Okay, so here what I'm going to do now, I already got that screen ready. I'm just going to press start assessment. I'm going to full screen so I can see a little bit better and zoom in a little bit more. See if I can do one more zoom in before risking it. Yeah, that's fine. Yeah, I'll be fine because I can still press the next button. I can see all the questions available at the moment. It's a lot more clear and easy on my eye. Okay, so here again the exams for 1 hour 30 minutes, 90 minutes there, so 10 questions similar to your bookkeeping transaction as well. So it is going to be a fast-paced exam. And also remember, guys, you need to learn how to stop and move on if you get stuck on a particular question. So have to have that sort of a mentality before you go into this exam. Okay, identify the characteristic of each payment methods below by selecting the most appropriate circumstances in each payment method would be used, showing whether the payments will reduce the funds in the payer's bank account on the day of payment or at a later day. So you have to think about it, what it can be. So if you say check is what type of payment it is. So you're going through all your answers. If you look at that here, okay, so you're looking at this option here, making a payment by post. So to send a payment by post, the most suitable way will be a way of check. Okay, because you won't send cash, you don't send anything different, and you don't want to pay by bank draft to your supplier, because why you worry about paying by bank draft? It's going to cost you money to produce that bank draft from their bank. So obviously the best option is going to be check, and that's going to be a post, making a payment by post to a credit supplier. And will that be on the date of payment or at the later day? Of course, the check will take 3 working days to get cleared. And then you have credit card. So why you need credit card? So have a look at that here. Making an automated one-off payment? No. Online payment to purchase goods? Yeah, maybe. Okay, let's have a look. A variable amount, fixed amount, these are not something you have to worry about. And then making wage payment directly to the employee's bank account. So this, none of them make sense apart from making an online payment. So when you pay by credit card, your payment is also protected against fraud. So you have to remember that that might be the best option. So will that be on the same day when you're going to pay by credit card? No, will be on a later date as well. And the last one, direct debit, is you pay an automated amount, but it's going to be for variable amount of month. This time the payee will be requesting the funds, not us. Okay, so in that case we don't have no control over how much is it, but we can stop the direct debit. But normally the amount is requested by the payee. Okay, so in this scenario, for a variable amount of money, and that is going to be on the same day, on the date of payment, your direct debit will go out. Okay, so that is the suitable answer for that one. So let me check it quickly. Yep, fine. And then if you further down, it is important to regularly reconcile the cash book with the bank statement. Show one reason why regular reconciliation is important. So here they're asking you why you regularly have to reconcile your bank statement with your cash book. So to check whether any discount received from your credit suppliers has been correctly recorded. Do you think we record your discount received in your cash book? In the past, yes. In the past, we used to have something called a third column in your cash book where you record any discount received or discount allowed. But nowadays, we don't use that anymore. So this will be normally recorded into your day book called discount received day book or discount allowed day book if you're going to allow discount to your customers. Okay, so this one is not an answer. To check for any error on the bank statement or in the bank column of the cash book. Okay, so that might be a suitable answer. Yes, we can check for errors this way. Then we have to look at it. To check the total amount of cash sales has been recorded correctly. So that can be also, but is that going to be helping you to regularly reconcile? No. So might not be the right answer, but we'll check it anyway. To check to the credit customer that the credit customers have been paid in accordance with their agreed payment terms. I know you have to check those information, but is that going to be something, the reason why we reconcile the cash book and the bank statement? No. The reason for that one will be normally to detect any errors in your bank statement or in your cash book, which you may have done inadvertently. Okay, so this sometimes allows you to catch up a transposition error, an error of omission, or you may have think about it, you double entered something, means you're duplicated an entry. So this way you'll be able to check by doing your uh, bank reconciliation. 1 mark for that only, so it's not much to worry about there. Some errors in the accounting record will cause an imbalance in the trial balance. Okay, so you have to remember certain errors will and certain errors will not. Okay, so in this scenario, they're asking you what type of errors they are, and you have to select whether it's going to cause an imbalance or it will not cause an imbalance. Okay, sales has been recorded correctly in the VAT and the sales ledger control account, but debited to the sales account. So normally when you have to enter these entries, what do you normally do? You have to enter sales ledger control account debit, VAT account credit, sales account credit. So one of the entries supposed to be a credit, it was entered in debit. So therefore, debit will have a proportionally higher amount than your credit. So this will cause an imbalance. So let's put that down. I will cause an imbalance. Purchase of the computer by BACS has been credited to the bank account and debited to the office expenses account. So this is a classic example of an error of principle, because instead of debiting an asset account, we are debiting an expense account. So this one will have a debit and also have a matching credit. Therefore, this will not cause an imbalance of your trial balance. Okay. Cash drawing have been debited to the cash account and credited to the drawings account. So again, if you look at it, normally if it's a cash drawing, cash will be coming out of your bank, cash account there. So it will be a credit in your cash account and debit into your drawings accounts, because drawings will be opposite to your capital. But here the entries are reversed. But whenever it's even reversed, what you have to remember, your debits are there and credits are there and both amounts are matching. So this will not cause an imbalance. So let's select down here. Let me check my email quickly. 1 second. This. Okay, not worry. It's just an email about, the college reopening soon apparently. So we just have to do some testing. So we'll get to that a bit later on when we speak to you guys next session. Okay. The fourth one is the VAT on petty cash payment has been recorded in the petty cash book only. So if you look at that here, the VAT on petty cash payment has been recorded in the petty cash book only. That means only one side of your T accounts are done. So normally when we do this, we have petty cash book, yeah, and then whatever the cash payment, okay, so whatever you've done there, that will be an expense account there, and that expense account and the VAT accompanying accounts also has to be entered. If you haven't entered, so the books will have only your the credit entries there on the petty cash payment on your petty cash book. The debit entries are missing. Therefore, if that is missing, that will be causing an imbalance there. Okay, so that you have to be very careful with. And the last one is the discount received from your credit suppliers have been omitted from the accounting records. So therefore, this entry means there is no debits, no credits, no amounts entered. Therefore, this will not cause an imbalance of your trial balance. Okay, so there is 1 and 4 will cause an imbalance. The other 3 is going to be will not cause an imbalance. One of them is an error of commission. This is a reversal, and this is an error of omission. Okay. Now let's move on to question number 2. So let me just say here, question number 2 now. We have a small business uses wages control account to record its payroll transactions. These are extract from the pay slips of 2 employees for the month of July. So we have gross pay and all those information here. So what we now have to do, we have to find out what will be your wages expense. And they want you to know the HMRC liability, and then they also want the pension liability. They don't want how much you got paid. It's not something they worry about now. They only want to know what is your total wages expense. Remember, your wages expense is going to be all your gross pay plus any employer contributions. Either it's a pension or is it going to be national insurance. In this scenario, employee is only paying pension. No employer pension has been paid. Normally, on a perfect world, not perfect world, by the new legislation, the employer also must match the pension. But in this scenario, it's not happening. If the information is not there, don't worry about it. If it's not there, you don't have to assume they will be matching that amount. No, you don't have to worry about that. Here, you only have to add all your gross pay plus any employer national insurance contribution here. So in this scenario, the gross pay is going to be £2,000 plus £1,976 plus both of the employer national insurance. That's 182 plus 178. Okay, so these two will be added to £4,336. So here what we're going to do to record the wages expense account will be a debit of £4,336 and wages control account will be credit for £4,336. And then they're asking you to find out what is your HMRC liability. So HMRC liability is all of your national insurance, employer plus employee plus the income tax. So 225 plus 158 plus 182 plus 218 plus 152 plus 178. Okay, so if you add all of those together, £1,113. Again, remember, because the wages control account is a credit here, that means the every other entry will be on the wages control account as a debit, because we have to make sure this amount will be completely written off by the end of the payment process. So wages control account, we're going to go and choose that one. Is going to be a debit of 1,113, and then HMRC liability account, that will be 1,113 here. And the last one, to the pension is £198. So wages control account is going to be £198 debit, and then your HMRC liability is going to be £198. No, pension liability is going to be £198 credit. Okay, so here what we have established, two things. What is your expense? Your total expense for the business is going to be gross pay plus any employer contribution. In this example, you only have employer national insurance for both of those. So you add those together and you add it with your gross pay, you get your wages expense. And then HMRC liability means every part of your income tax and both of your national insurance contributions, employer and your employee. So this is what you have to keep an eye out for. Now let's move on to next question here. New business PR products has been started and the following transaction have taken place. Owner has invested £15,000 in the business bank account, and office furniture of £3,780, purchased using business debit card. Okay, so you have to remember this one used by the business debit card. So if there's a business debit card, what's going to happen? It is actually going from your business bank account, isn't it? So we have to consider that fact when we're going to enter those entries into my journal. So the first one is when the owner investing £15,000 to the bank account will receive money into the bank account. So that 15,000 goes here, and the capital account will be going £15,000 credit because that is the liability for the business. Okay, then next one, the journal for the recording the purchase of the office furniture. In this scenario, we are creating a new asset called office furniture. That office furniture, £3,780 on debit, and where the money going out from? It's going out of your bank because it's from your business debit card. for 3,780. That should be straightforward as that. But remember, 8 marks for this question. You always wonder how come I have so much marks on this, but this is how these questions are worded. Okay, whenever you get it, don't overthink it, just look for the facts. Okay, if the owner is paying using his own debit card, if they use their own card, what happens now? We create an asset and we go back here and create this entry as a capital as well, because here instead of giving a business cash, the owner using his own bank account means it is also going to be recorded as a capital, because we have to pay the owner back for that value of that asset he is acquired on behalf of the business. So if you get a question like that way, think a bit out of the box, those kind of questions. Okay, a bit next one now. This is an extract from the sales invoice issued after the business started. Invoice la di la di la, 800 items of CH7 at 65 pence each. The total amount due is 520 pounds. The term is net 30 days. Okay, the customer has now ceased trading, owing 520 pounds. We are not registered for VAT by the look of it. Okay, so let's have a look at it. Complete the partially completed journal entries to write off this 520 pounds. So this, when we recorded this transaction first, we added this figure into my sales ledger control account on the debit side. So the money the customer owe you will be added there as as a current asset. So here, what we now have to do, we have to write that asset off. So if you have to write the asset off, we have to credit the sales ledger control account. So we go down here, sales ledger control account will be credited. This 520 on the debit side will go in your irrecoverable debt account, because this is how we call on the general ledger an expense for me, because we losing that particular sales. Okay, so whatever we've done now, we have to reduce this amount as an expense to the business. Okay, next one. 1.4. Okay, so when you see this question, you always think, oh, all right, okay, what I'm going to do. So if you look at that here, you just have to drag and drop these balances. Okay, so now again, start with, let's have a quick look at this account. At the end of June, the debit side of the VAT account total at 4,316 pounds, and the credit side was total at 1,942 pounds. This is for June, but this one is the July. So because of my balance from the previous month has a debit balance, okay, the new balance forward also has to be on the debit side. Why? Because this scenario, a VAT account means we are due a VAT refund from the HMRC. Okay, so in this scenario, the opening balance has to be on the debit side. So if you look at these two, that should automatically tell you my debit balance is going to be higher. So when they close the account off, balance carried down was on the credit side, and the new balance brought down will be on the debit side. So we have assumed that, we have done that. Again, remember, you can write your T accounts for your VAT control account next to this to just make sure you understand where this is all going. Then we are looking at the bank VAT refund. Do you think once we get the VAT refund from the bank, how from the HMRC, how that's going to be recorded? Money coming into your bank account, debit, HMRC VAT account, it's going to be a credit. Why? Because the money in this scenario evens this opening balance out. Okay, you can go and put it down here, it doesn't matter. We just put it wherever it goes first, because it only cares about whether it's going to be debit or a credit. Okay, then now what we're going to do, we have to remember our mantra. What we do, we consider one T account. One T account means one general the book of prime entry, sales ledger control account, sales daybook. From the sales daybook, VAT goes into where in my VAT control account? On the credit side. So we look at the sales, yes, and then we put that down here. If the sales is here, sales return will be opposite, same as your discount allowed will be opposite. And if your sales is here, where's the purchase is going to be? Purchase is going to be opposite, and the purchase return and your discount received will be both to the credit side. So you now have a look at it. By just looking at the sales alone, I will be able to do the other 5 as well. And then again, cash sales is going to be same side as my sales, and the cash purchases is going to be same side as purchases. So this makes total sense. If you remember one, Everything else will be automatically falling into place. So just give one example to yourselves, guys. Sales day book, where is the VAT going to be going to? That's going to be credit side of the bank account, because SLCA debit, sales and this VAT account both were going to be credit. So this is what I have used there. 10 marks for this. Done and dusted. Let's move on, guys. Let's next question. Let me see. It says there I need to scroll down a little bit, see whether there's anything. Nah, it's just end of task. It's just been a pain. Yeah, just make sure you scroll down. If it says there might be something. Here you go. You have more way to scroll down until the end of task. Okay, just keep an eye out for that. All right, now if we have here, there are balances on the purchase ledger and the information they have given us now. Okay, there are a couple of purchase ledger account has a debit balance. 5 accounts got credit balance. So to find the total amount, what we do, we add all the credit and take away the debit amount. So let's go to my calculator. 10,416 plus 8091 plus 15,705 plus 1277 plus 3033 minus 418 minus 673, and I'm getting 37,431 pounds. So they're saying here that is the amount. So here the total of the balance of the purchase ledger. So the purchase ledger amount is going to be 37,431 pounds. Okay, we got that now. And then we're looking at this information. The balance of the purchase ledger control account also not yet been recorded. The account had the debit entry is 29,644, credit entry is 67,522. So 67,522 the highest. Take away this 29,644. The answer is going to be 37,878. Okay, so 37,878 pounds. So the difference between those two accounts will be 447 pounds. So there is a difference of 447 pounds. Again, they're coming back here for 1 mark. They're asking you what can be the reason for that. So what we'll do, we will post this and then we will come back later. So what I'm going to do, I'm just going to quickly flag this question. Yeah, I think I pressed the wrong button there. Give a second, please. See whether the flags. Yeah, it flags the question now. And let's move on to the next bit. Okay, so they're asking you here, then show where these entries going to be either a debit or a credit on my SLCA by dragging each amount to the appropriate column. So again, what is the best thing you do? Write the T account by yourself. So once you start writing the T account by yourself, it makes a lot more sense. On this scenario, the balance owing on the 1st of July, this is going to be opening balance. Sales ledger control account is an asset account, so that will be a debit balance. So whenever you receive payments by check, what it happens to your SLCA? Remember, when we receive payment, it is going to be a debit into my bank account, credit into my SLCA. Put it another way, it reduces the balance of my sales ledger control account because your customers start paying your money. So of course, that is going to be a credit. When you allow discount, what happens? That will also reduce the amount they owe you. So that's going to be a credit. When they buy more goods, that is going to be increase the balance. That is going to be a debit. Why? More goods bought from your sales day book. I'm going to be entering all those totals from your sales day book into the debit side of the sales ledger control account. So if you have goods sold increase in the balance, this one will reduce the balance, isn't it? So that's fine. And then also, if you look at that here, payments received in cash. So also same like check, if the customer decide to come to your premises and then he pays by cash, of course, that is also reducing the value. Okay. Same irrecoverable debt. Irrecoverable debt, what happened to your business? It is going to be written off as expense. So irrecoverable debt is a debit. SLCA will have a credit entry. Okay. So here they the last one. The journal debit. Bear for a second, please. I just had a call from Beverly. Bear for a second. I'm just going to post this. Please. Okay, sorry about the delay, guys. I'm just going to carry on with it. My time is still running, so I'll probably have to have an issue with that one. Okay. Uh, Journal debit to correct an error. Okay, so if there is a journal debit to correct an error, the entry has to be on the debit side as well. So remember, when there's an error, you're correcting it. It has to be, if they say journal debit, you need to make sure the relevant entry also goes on the debit side of that relevant account. Okay, now they're asking here, what will be the balance brought down in the sales ledger control account on 1st of August? So we have all your debits and we have all your credit. Then we have to look at it. What's your balance brought down? Balance brought down is normal, the new balance on the 1st of August. So we know for a fact, unlike the VAT control account, the sales ledger control account will always have a balance brought down of a debit figure. Okay, so we can put that mark straight away. You don't have to even worry about thinking whether it's going to be a debit or credit. But let's work out the total. All your debits minus all your credit, you're getting 51,354 pounds. Okay, so check with your answers whether you have that same figure. Okay, we'll come back to the last bit later on for that 1 mark, because that is something I always push back. Okay, now then we have a lovely bank reconciliation question here. So here what we're going to do, we have all those information now and all the information here as well. We need to make sure they want you to update the cash book as you need it, and the cash book carried down on the 31st and the brought down on 1st. So we're not doing the bank reconciliation. What we're doing now, we're only going to be updating the cash book. So let's start now. So remember, the balance brought forward here is 646 pounds. D means we are overdrawn. Here the balance brought forward is 1,421 pounds. So these two are not matching. So we need to find out what was the difference between those two. Both of them are overdrawn. If you look at that for a fact, because it says D, that means overdrawn, and this is on the credit side. The difference between them is 775. So the only thing I can see on my bank statement is this. Have a look at that. It's also another giveaway. Look at the check number here is 53. The other ones is 61, 63, 64. Therefore, this might be one of my timing difference from the previous month. It has been encashed now. So if you look at that here, these two values will match with my opening balance of my cash book. So let's go forward and check any further there. So we got Marvin PLC 2442. That matches that boat in here. There is a Costa PLC. It is not in my debit side here, so we'll come back to that later. 388 pounds from Seth Smith. Okay, so that is also there. John T Limited, 1,916 pounds. It is also there. That also can be reconciled. And then if you look at the credit side, because you see I'm doing debits first and then the credits after, it's a lot easier. You can do numerical way, like one by one, but this way you have kind of a discipline of doing one side first and then you narrow it down to the other side and you work that other side out. So here 734 pounds for Jemima G, that is there. 515 pounds, it's also there. 492, it is not there. 2020, it's there, so we can record that as well. And the last one is the bank charge, is also not here. So we are missing 3 transactions for my bank statement in my cash book. So the cash book has to be updated with all of those information. Okay, so what we now have to do, 1, 2, 3, 4. Okay, so what we now have to do, we just have to find this information, put them over to the cash book, and then find the new balance for my cash book. Okay, so the first one is 4,874 pounds, which is from Casta PLC. That's for 10th of May. So just go here, choose 10th of May, and say, what is that Casta PLC? The amount for 4874. So 4874 there. We've done that now. We can tick this off as it's done. Then we have a payment for Healy Homes, a standing orders, 22nd of May. So 22nd of May on Sunday. not sure why that is a Sunday. No one pays that on a Sunday. There you go. There is no check number there to record there. That's fine. All we need to do, we just start to put it down as Healy Homes. So we go look for Healy Homes. The amount is £492. The last but the least, 28th of May. Scroll down a little bit. Here you go. I found the bank's the bank charges. So we go look for the bank charges here for the amount of £28. So we've done all of that. Now what we now have to do, just tick those saying you have done them. You don't have to do them for the exam though, because they're not going to take marks out for not doing it, but it's good if you know. So that means these information's all been updated. If you want to click this as well, that's fine, but it makes no difference to your final marks. So what we now have to do, we have to do the balance carried down. Okay. Okay, so let's have a quick look at it. The last day is going to be the 31st of May, and then we say balance carried down. The difference between those debit and the credit columns, 9620 minus 6817, it is going to be 2803, £2,803, and same applies to this side. This time we're going to be June the 1st, balance brought down 2803. Okay, so let me quickly check it. That's absolutely fine now, guys. So we have done that as well. So keep an eye out for the missing information. This one, it is not a matter to me. Why? Because this is what we call a timing difference. The timing difference is what we do. What do you call? We're going to use that information to do your bank reconciliation. Next one. Right, now here they're saying the Marple PLC's bank statement for July shows an opening balance of £3,298 and a closing balance of £2,372. Okay, so what we now have to make sure to find the bank reconciliation. How are we going to do that? So this is the partially completed bank reconciliation statement. So if you want to do a bank reconciliation, you normally use your closing balance of your bank statement there. So the closing balance is £2,372. This one is there to confuse you. So they normally you have to use your closing balance, because this is how you know all the transactions are done already. Okay, so what do you normally do on your bank statement? You're going to add any outstanding lodgements to that one and take away any unpresented checks. So there are 3 outstanding lodgements there. So £2,372. And you have to add these 3 figures. So 2966 plus 302 plus 1055. So the value of £4,323 will be added to that amount. And we'll take away any unpresented checks. The unpresented checks were the total of £3,911. So what we do for the bank statement value, we add 72 plus 4323 and take away any unpresented checks. The unpresented checks are 3,911. So it's 2784. 2784. That is done. Next one. This is a summary of the debit and the credit entries in the bank column of the cash book. So we have all the debits, all the credits. They're asking you here, check the bank reconciliation statement in A has been completed by calculating all the value of your debits and credits. So this is a job for your calculator. And total of each bank columns after the balance carried down has been recorded. Okay, so what we now have to remember, once we've done the balance carried down, the both total should be equal to each other still, isn't it? Because after all the values are entered, your bank column will have a total value. So let's have a look at the debit side first and the credit side after. 3156 plus 716 plus 2966 plus 917 plus 302 plus 1055. So I'm having a value of 9,102 pounds. And then take away 7,007 minus 1,042 minus 1,842, 638, 167, 2069, 510, and then 395. I'm getting a value of 2784. Check whether the balance is matching as it is. See that balance and that balance both are correct. Okay. So that is done now. Next one. This is the bank statement and the cash book for July for a different organization. So they ask you to do a quick reconciliation there. They ask you have to prepare to produce a bank reconciliation statement on 31st July. Start with the balance taken from the bank statement. Identify the tools transaction. We entered in the bank reconciliation statement the amounts to be added. So the amounts to be added normally what? These are the outstanding lodgements, okay? And the one you take away will be your unpresented check. So let's go through this and find out what transactions were not reconciled. So if you look at that here, that amount and this amount, it's not matching. So therefore, there is a difference of balances. So let's find out 2496 minus 1907. It is going to be 589 pounds. So that means like a sore thumb, this value and this check number sticking out to me. See that here? This check will reduce that balance of my bank statement. Once that reduced, that will match my opening balance of my cash book. Also remember, look at the check number here. It's 61. The one we using nowadays is at the later stages of 660s. This is the beginning of 60s. So therefore, these three can be used as a first part to reconcile. Then we have to look at the amount. Tommy Traders, we match that one. Vodo PLC, no, I can't see that. Jack and John T for 401 pounds. Yes, you got that one. Fertile Limited, yes, got the Fertile Limited here, counter credit, and the last one 527, it's not there. And now look at the credit side, Quick Limited 461, it's not showing there. 755 for Phoebe King is there. DAX Printing 668, no, hold on, it's not there. 325 pounds, that is there. TPQ117, that one is there. And the last one is Silung 7673, that's also there. So now what we care about is what's in your cash book but not in your bank statements. These are the what we call the timing difference. These three information here, this will be normally updated in your cash book later on. So whatever we're missing in my cash book will be done. But anything missing on my bank statement are these four transactions. See, these two are my outstanding lodgements and these two are my unpresented checks. Because why? Because these are your timing differences, because we expect the money to be coming down to my bank account, but it hasn't shown yet. This check we have given them to my suppliers and they haven't cashed it yet. So therefore, these are the ones we use for our bank reconciliation statement. So here, what we're going to do, the two entries going to be, one is Waldo PLC. So look for Waldo here, yeah, and for the value of 2546. And next one is going to be Fred Fanks. That is for 527 pounds. They're all done. The next one in this one is going to be Quip Limited. So we just start to scroll down and find Quip. And the next one is DAX Printing. And this one is going to be 461 pounds and 668 for the other one. That's all it is there. All it done here is just checking against each other and found what are the timing differences here. Okay, now let's move on to question 1.8. Then we have got a question about suspense accounts. Okay. The suspense account has been opened with the balance of £950. Okay, so here what we now have to ask ourselves, there has been identified as an entry made in the general ledger for discount allowed daybook shown below. The total of the net column has been recorded in the correct account, but in the wrong side. So what we now have to remember, we have to understand how this should have been entered, but how that's entered now. So if you look at that total figures again, the discount allowed daybook shown below, the total of the net column has been recorded in the correct amount, but on the wrong side. So the daybook itself will be what? The discount allowed daybook, where we're going to be entering them. So this discount allowed will reduce the value of your sales ledger control account. So this is going to be a credit on sales ledger control account, debit on VAT, and debit on discount allowed. So what they've done now, we have entered that into the credit side of my discount allowed account. Okay, the discount allowed is normally an expense account, should be a debit balance, but what we done now, we have reversed one side of the entry. So the other one entry is completely done on the wrong side. So how I'm going to remove them? If you've done a reversed entry, you enter the right entry twice, you repeat the right entry. So here I'm going to go discount allowed 475. This one will remove the incorrect balance. Then we come back again, discount allowed 475 again on the same side for repeat the entry. Now finally the suspense account to reduce that balance to 0 on both sides. If you look at that here, debits and your credits are matching. So here this £950 suspense account must have opened with the debit entry. That now will be cleared once we enter this journal. Okay, so that is now sorted. Next one, and another error has been found in the general ledger. A check payment for £630 for motor vehicle repairs had been entered in the motor vehicles account. So what we now have to remember, this entry is an error of commission. Okay, so this one we supposed to be entering on expense account, but we entered into the asset account. So how was the entry? One of them is going to be the expense account, debit, bank, credit. The credit side is correct, but the debit side is being in the wrong account. So what we now have to do, we have to remove the entry from the wrong account. So motor vehicles account where the wrong entry is. So we just go and find that entry and then credit that account with £630. So we'll remove the balance. Then we go into the right account, which is the motor expense account, and we'll debit that account now. Debits and credits are matching. Your journal entry closes. No needed for a suspense account. Why? All your primary conditions are met. Do you have a debit? You have a credit? Do you have the amount? Both of them matches? Fine. So therefore, there is no need for a suspense account here. Last but the least, a transaction has been omitted from the general ledger. A BACS receipt for 1,664 from credit customer had not been recorded. So when you're receiving payment from your credit customer, bank account is going to be a debit, sales ledger control account or trade receivable is going to be a credit entry. Okay, so what we're now going to do, we're going to look at the bank because it's a BACS receipt. So here we're going to 1,664 debit. And you have to look for your sales ledger control 1,664 credit. Okay, so that is the final entry on this one. Now let's move on to 1.9. We got plenty of time still, but we still have to work out on how we're going to allocate times for all the trouble questions you may have to go across. Okay, now let's have a look at this. The journal entries below have been prepared to correct errors. So we got that information here. Now what we have to do to check. Okay, so the suspense accounts here, heat and light, one entry there, and heat and light again, and another suspense account here as well. So what we now have to do, we need to drag and drop, see which entry is going to be what. So suspend got 982 debit. So on the suspense account, we have to choose the heat and light 982. Why? It makes sense because we cannot put suspense on the same account. So it has to be the heat and light account, which is the opposing entry. And then from here, I'm going to use the suspense account that way. Okay, so this way it correlates to your both double entries. And then heat and lights 353 debit. So suspense is going to be here and the heat and light is going to be credit. Okay, so this one, it makes more sense to me how we do your double entries. Okay, so have a quick look at it, guys. This is how the final answer should be. Now, next one. Similar type of questions. Journal entries below have been prepared to correct omissions. So there are a couple of omissions there. So how are we going to do? The drawings had an opening balance here. So we're adding more to the drawing. So we have to look at the bank deposit, debit, and the drawings account is going to be, where's that again? Bank deposit. So it's going to be the bank deposit account will be credit here. Okay, so this one, if you look at that now, that is going to be the right entry for this one, and this one will be the opposing entry there. Okay, and the next one, loan from the bank, it will have a debit entry of 1850. So we say bank deposit. So what is the realistic sense of these two entries? Have a look at this. So the loan was a liability. What we're doing, we're taking some money from my deposit account, means it's my savings account. We're paying for that one. So the loan account will have a debit. My asset account, which is my deposit account, will have a credit entry. Against for the drawings, money going out of my deposit account and it's been paid into the drawings account because the owner's taking money out of the business. Okay, and the last entry, what will be the balance carried down in the bank deposit account? So let's look at the bank deposit account quickly. It has a 15,500 debit balance. Take away both of my payments, 1850. I will have 12,150 pounds. But is that going to be balance carried down, isn't it? So the balance carried down is going to be on your credit side. Why? Because this is where you use the balance carried down to total your both columns, and the new opening balance or the balance brought down will be on the debit side. Okay, so in this scenario, balance carried down, it's going to be on your credit side. Okay, so let me check it. Yeah, that's fine. The last question. Plenty of time still left on the clock. Let's have a look at this. On 30th of September, a trial balance was extracted and did not balance. The debit column total 202,832 and the credit columns total 203,307. So what entry is needed in the suspense account to balance the trial balance? Do not enter a 0 in the unused column cell. So let's have a look at it here. The suspense account is going to be 202,832 minus 203,307 for the value of 475 pounds. Since your credit is higher than debit, the suspense account will have a debit balance on the on the trial balance. Okay, so this is what going to happen on that part. Next one, the journal entries have been prepared to correct the errors and clear the suspense account as shown below. So we have to look at that. There are two entries in the credit side of the suspense account. So if you look at that, if you add these two, that cancel that debit balance, isn't it? So it makes more sense. Now they want you to calculate the new balance of each accounts after the journal entries have been recorded. So once we've done that, the general expenses account have a debit entry there. So what is that going to do? It is going to be added to your expense account because your expense account is going to be a debit account anyway. So you're going to be adding 397 and the new balance is going to be 16,129 pounds. And the last one, bank interest received. What is your bank interest received? It is normally a credit balance. Why? Because it's an income for you. So 199 pounds income on the credit side, but we have a new entry on the debit side of it. So therefore we have to take that away from your 199 pounds. So we'll have a value of 121 pounds in my bank received account. So that is also now complete. Now last, we have complete the trial balance below by inserting the figures of first 7 accounts in the debit or credit column. Inserting the balances you calculated in B in the debit or a credit column. So we have to look into that one, all the information now. and total in the debits and credit column. So what we're going to do, we're going to do one by one. 14,279 for that one. Cash 10,253 pounds. We got that. Furniture and equipment is going to be an asset, 78,369 pounds. Then we have the purchase ledger control account is going to be liability, 442. Then you have the VAT owing to HMRC. Owing to means we have to pay them. It's a liability. Cash sales is an income, 150,311. And the purchase is going to be expense, 556. The general expenses is going to be 16,129 pounds. And the last but the least, the bank interest received is an income, 121 there. So we have done all my debits and credits. Yeah, I'm very surprised. There is no ledger control account for your sales. There's no sales ledger control account, but which is it's okay anyway, because you possibly do all the sales by cash by the look of it. Yes, the sales are mostly done by cash by the sound of it. There's no credit sales for this business. Okay, so let's add the debit sides first. 10253 plus 78369 plus 98556 plus 16129. So I'm getting 203307, 203307. Okay, so let's see, my credit balance is also matching. 14279 plus 32442 plus 6154 plus 150311 plus 121 203307. It matches my credit balance and the debit balance. So your trial balance is matching. What do you need to be careful with, guys? If you make an error, look for the half of that error amount, and then you'll find out which entry you have done it wrong side. Okay, but if you make too many entries, guys, your life is going to be a lot more difficult. So do use your dead click a lot in this type of question. Let's go back to my marked question here before. So this one, we have a discrepancy between those two. So remember, which I have already told you a couple of times before as well, how you work out a question where you have this, what do you call, kind of a wordy thing. So you normally use a piece of paper, you have to write your T accounts down on that one, and that will be a lot easier if you've done that way. So what I'll do, guys, I'm going to do the same thing again. I'm just going to share my desktop where I'm going to use the paint screen, which makes a lot more reference to what we're looking for. So here, first one I'm going to do PLCA is going to be big than my purchase ledger. Okay, it's going to be smaller. So what we now have to remember, we have to discuss, we write the T accounts here, PLCA and purchase ledger. So I'm going to start with £100 on the credit side for both of them, because remember, this is a credit account because they are liability. So now I'm going to discuss all these four different scenarios to see which one could be the reason for that discrepancy. PLCA must be higher and the purchase ledger should be lower. So let's go and have a quick look at it. Goods purchased were entered twice in the supplier's account on the purchase ledger. So when we buy more goods, we enter on the credit side of it. This is how it should have been done. But what we done, we have entered it twice on my purchase ledger. So the balance is 120 here and 110 here. This one is not met. If that is not met, that is not the right answer. So let's clear that. First answer, it's wrong. The goods returned were entered twice on the purchase ledger control account. So when we return goods, we're going to be entering on the opposite side. So what happens? This is how it reduces the balance. But what they're saying here, it's been entered twice on your purchase ledger control account. I'm using 10 again because it was entered twice. So the balance is 80 and this one is 90. But this not matching. Why? PLCA should be higher and comparing to your purchase ledger. So this is not meeting that standard criteria. So therefore, we will ignore the second answer as well. Third one. Discount received were entered twice in the purchase ledger control account. Again, when you receive discount, what happens? We'll put it on the opposite side. So we'll reduce the balance we owe to our suppliers. but it's been entered twice. So it is similar to your goods return. So what it does, it reduces the balance. Okay, so now here the amount is 80 and 90 again. Still, it is not matching what we are looking for. So we eliminated first three answers and we think the fourth one is going to be right. Yes, of course it is going to be right, but let's prove it. Payment was entered twice in the supplier's account on the purchase ledger. So when we pay something to your supplier, bank account, credit, PLCA, or your purchase ledger, both going to be having a debit entry. So here I'll put debit entry here and debit entry here, but it's been entered twice on your supplier account. So here we entered it twice. The balance is now 90 and this one is 80. This matches that narrative there. Purchase ledger control account should be higher than your purchase ledger. What we can do in that scenario, this will be the right choice. So we go back here, do this one. We'll get back to full screen, and then what we'll do, we'll unmark this flag, and then we'll get here and we'll submit that exam. I think we've done everything there. And also, guys, remember the questions you normally find tricky when you get to the bank reconciliation statement there. Check your opening balances properly. Check your, what do you call again, the missing entries, which you have to update later on, and clearly read what they're asking you to do. Certain questions, they didn't ask you to do the reconciliation at all. They only want you to do update the cash book. So do those things. And plus, when it comes to the errors and those kind of things, read the question carefully, how they want you to be interpreting it. And then also make sure your debt click. Remember that one. And then obviously when you're doing a VAT control account and or any control accounts, make sure write the T accounts down so you will feel a lot confident when you see the T accounts. It's easier what you can see instead of reading the numbers. Okay, so let's see. Yes, it's told me of past. Yeah, of course, I've been doing that for a few years, so it's obviously a really good way to know how we done that exam. So I will do now, guys. I'm going to be stopping this recording, and I'm going to be wishing you everyone best of luck for your exams this Wednesday and Thursday. On Thursday, whoever sitting on Wednesday from 11 to 12:30. I will be still in campus. You can contact me by our Teams. And if you have any doubts, anything last minute, anything you need help with, please do ask and I will be able to help you guys with that. Okay, it's between 11 and 12:30 because I'm going to be preparing for your next module when you come back after this week. Next week we'll be starting working effectively in finance, and that also going to be something to do with your synoptic assessment. Okay, so we will be doing loads of activities there, and I'm going to be asking you to do loads of like discussions. I want you to create some sort of a PowerPoint presentation as a group. I'm going to allow you a whole session for that one for you to prepare as well. So you guys are going to be working in tandem and you're going to be working in small groups, and I'll be swapping the groups around, and then you'll be doing a presentation for the whole of the class. And this is all going to be done by you guys. I'm not going to be helping you at all. No, I'm just kidding. I'll be helping you. I'll be popping in and out of your rooms. And then obviously this is to make sure you guys are all well prepared to your synoptic exam. Okay, then all the best, guys. I'll see you again Thursday. Take care. Bye-bye.